Is there a better way to start the stream than John saying, I might sneeze? Welcome to Market Wake Up. It's Friday. We made it. It was a long week, macro week, but we got it. We got here, John. Everybody celebrate. Give yourself a big pat on the back, a round of applause. I hope you've had a fantastic trading week. In fact, let us know how your trading week's been. Very quiet on my front. I'm going to assume very quiet on your front as well, John. But in chat, let us know how you trade and how your trading week was. Welcome to Market Wake Up, the show where we're going to break down the macro mumbo jumbo. So all you need to do is trade it. Today, it's NFP. It's NFP day. It is the day that every Forex trader, whether they trade macro or not, they know it is NFP. And we're going to be talking all things US dollar. Let's get into it. Good morning, John. Happy Friday.
Happy Friday. I'm so glad it is Friday, I must admit. It felt like the week that just kept on going. I felt like it was the never-ending week, but we've made it. We've got here. We've got to the end of it. We've got NFP rolling out today, which is going to be a fun one. I want to get some chat involvement on NFP. I want to know what numbers everybody thinks it's going to come out as today. Going to get your opinion on this as well, Jordan, a little bit. I'm excited for today. I'm excited for today because it's Friday for one, and for two, we are going into election week next week. So
it is. Yeah,
there's a lot going on next week. I can't wait to see the outfall of all this.
When would the election be called? Will be around. It's usually around like 11 or 12 p.m. New York time, right?
Mm-hmm.
Which will be midday my time, like maybe 3 a.m. your time.
Yeah, it's like early morning for me.
I was gonna say it'll be interesting if we could stream as it was called and just see the reaction. Chat, what do you reckon? You reckon we get John up at 3 a.m.? What are the no. But
right,
I am
just put like a cardboard cutout of me there, and then that could work.
But no, I am looking forward to seeing how the charts react, how prices react. I'm looking forward to seeing who wins.
Yeah, well, I mean, that'll be a big one, won't it? Who's going to win? That's the biggest question of all, I think. It's still it's so hard to call, isn't it? And I kind of love the fact that it's really hard to call, because it just brings that uncertainty, brings those opinions and talking points into play. It's just I'm going to go with. So the polls have put Harris in the lead. Bookies have put Trump in the lead. So, I don't want to. I was going to say, just as a betting man, I'd probably say it's probably going to be Trump. But
bookies definitely better than polls.
Yeah, definitely,
hands down.
Yeah. So
bookies I think odds are usually better than polls.
Yeah, that's why I feel like I want to go with the bookies. I want to go with the bookies and probably say it's going to be Trump that's going to take it, but. Yeah, you just don't know. I mean, the last election that they had with obviously between Trump and Biden at that point, there was all this. He was claiming it was rigged and X, Y, and Z, and that he should have won, but it was all the electric votes or whatever that were rigged or whatever. So, yeah, I mean, we've got a similar situation this time.
Yeah,
a lot of electric voting in it. It is electric voting in America, isn't it?
I think it's a mix.
Is it a mix? Because I'm pretty sure they do a lot of electric voting, which is what he was complaining about. Because I'm pretty sure I've seen Elon Musk talk about sort of it should go back to paper and things like that. But we'll see what happens there. See what happens.
I'm not too in the loop with how the US. One thing I know, I just try to differ what I'm used to when it comes to voting in politics. Mm-hmm. Now, it's not a law, nor are you really incentivized in the US to vote. Which, with this being so 50-50, I think it'll draw more voters. I think it'll draw in a lot more voters.
Yeah, sure.
With it being so close, because people will want their say and they'll know that their say matters. Which you could argue is a good thing, because if you've got majority of America voting, then whoever majority of America actually votes does get the presidency, and that's called democracy. So that's a good thing. But yeah, boy, I just can't call it. If the odds are going Trump's favor, like betting odds, if as a betting man, as a trader, I'd follow those.
Yeah. But we're not seeing the market necessarily price in a lot of it, I don't think. Dollar strength, yes, I guess we've seen a lot of dollar strength recently, but we do typically see that heading into an election anyway. You know, I talked about this at the beginning of the year. Usually the run up towards the election, we get that dollar strength coming into the market, and it took a while. It took a long time, and we got to the end of September and it still wasn't there. But as soon as we turned that corner into October, the US dollar kind of had a fight back, and we got up there again. So yeah, it's going to be interesting. It's going to be interesting. But overnight, I've seen some interesting stuff. Oh, well, actually, look, should we talk about what happened yesterday in terms of core PCE?
Yeah, do me a favor, run everyone through that. I'm going to quickly pop off the stream. There's just something happening here that I need to sort out. So, yeah, I'm in a slight emergency, so let me sort this 2 seconds, and then we'll get into it. In the meantime, you talk PCE.
I'm going to talk PCE. So PCE came out yesterday in the US. Now, core PCE differs from core CPI, as it only measures the goods and services that are targeted towards and consumed by individuals. So it's a little bit more accurate in terms of what we're getting in terms of total expenditure per item and consumer spending behavior, because the market is all built on consumer spending, right? So it's important to understand that this is the primary inflation measure that the Federal Reserve will look at. So it was revised. The previous number was revised from 0.1 to 0.2. So we got a bit of a higher reading there. And then this reading came out a little bit higher at 0.3, which I thought was very interesting, because although it's been that in the past, the last time we kind of had a similar reading like that was October of 2023. So it was the same time last year where we had a very similar reading, as well as sort of May this year, I think, as well. So we're not really seeing the core PC price index going anywhere below the sort of 0.2, 0.1s really. And I mean, it does, the sweet spot is probably around 0.1, where they'd want to see it at. But it brings kind of this interesting dynamic into it, because we had JOLTS job openings declining again. We had unemployment claims, which actually went a lot lower as well. So the data out of the US has been fairly positive recently. And this is also kind of helping fuel that move back to the upside for the US. I mean, unemployment claims came in at 216. So that was quite interesting as well to see. So US data is pretty good going into this election. Despite this, S&P 500 to the downside yet again, which is
I mean, one out of everything we looked through there at the same time, also touching on CAD GDP come out at the same time, flat as forecasted, but the previous month was revised down to 0.1 as well. So GDP is not looking too hot for Canada. Important oil conversation, but we can do that after. With the data that did come out in core PCE, now we know core PCE is one of the measures which the Fed really like. They're very vocal that core PCE is something they watch. As the employment cost index actually fell. Now, the employment cost index is how much companies and managers are paying, right, for employment. Now, there's two ways of this. There's one, you can look at pay rise, pay cuts, like the actual dollar figure, but also if you've had layoffs, well, then you're spending less in that employment cost, and that will bring down that cost index. So it's interesting to see that the cost index has also come down at the same time the unemployment claims has come down. So it's like there's more people being employed, but they're earning less, which is a little balance there, which isn't necessarily a bad thing. As an economic point of view, right? Not for the people that are earning less, right. But another thing to be looking into that I'm sure that the investors are pricing in.
Yeah, no, definitely. And that kind of goes into NFP today, and it can help you kind of understand what could happen with NFP today in terms of, yes, we might get a higher reading of more people employed, but just the average hourly earnings is expected to come in a little bit lower as well. So that's something we can talk about in a moment. But have you seen the situation in the UK at the moment?
No.
Since the budget. So budget, we talked about this on Wednesday. Was it Wednesday? The budget was coming out. So Wednesday budget came out, and it didn't have the reaction. I sat there for a good 2 hours looking at the market, seeing how the market would react to it, and we didn't really get anything happening. Now the market's had time to digest it, because it's basically when the Chancellor gives their remarks and whatnot, they kind of give their main points, and then I think around 2:30 p.m. they give the full budget. So we didn't really see too much from it, but the past couple of days now, or the past or at least into yesterday and today, the pound has been getting hit a little bit. We've seen a little bit of a big drop in the pound against the US dollar. Pound across the board is being felt a little bit to the downside. I was having a little look at the UK gilts, which is the UK bonds, and looking at the ETFs with regards to that. They have an inverse relationship with interest rates, and you can see that they are dropping at similar levels to what happened in 2022.
Where's Barry? Where's Barry?
Yeah, get Barry
in here.
Get him in here. So there, I was just watching this morning, and Reeves was back on. Chancellor Reeves was back on chatting to Bloomberg, and Bloomberg were like, well, you're kind of at similar levels of Liz Truss, and she was just kind of going, well, you know, the previous parliament had ruined it for us, so we've got to do X, Y, and Z, because they said they weren't going to raise taxes, but then raised 20 billion in taxes. So yeah, market is not enjoying this at the moment, and UK yields, bond yields are moving higher, and it's going to put a little bit of pressure now on the Bank of England. Are they going to be able to cut these interest rates like they wanted to, or were expected to? I guess very much like other central banks now. We've been talking about this for a while. They're going to cut. They've cut, but how aggressive can they cut? You know, without causing too much of a situation.
Sorry, just to confirm that people are dumping bonds.
Mm-hmm.
That is a Liz Truss moment, isn't it?
Is a Liz Truss
that was Liz Truss proposed something. The bond market said, "Screw you. We don't think that's going to work. We're going to dump bonds and get you out of office."
Mm-hmm. It's not, don't get me wrong. The pace is a lot different. The pace is a lot. Yeah. With Truss, the pace was pretty quick, and she was out within 2 days of that mini budget. So
the man, the myth.
Oh,
you said 2007.
You've been Barry with me.
Here's a fun little one before we get into freshly squeezed. Have you seen the Fed Watch tool today?
I have not, actually. No, I've not.
Broken. 100% chance of a rate hike next week, all the way up to 6.25%.
You're joking, mate.
I'm not joking. That is the Fed Watch tool. I can go ahead and share
it on the screen. Now. I've got to witness
this. Everyone, as I share this, please know this is broken. There is no way that is actually what the market is priced in. Just to prove it, I have gone and looked at the bond market. I've looked at the contracts, the futures contract of the Fed funds rate. This is wrong. Okay, it is wrong. The futures contract is pricing in. It's
anyone reported on this?
4.65%, I think, is what the futures market is priced at the moment. 100% chance of a hike, 100% chance we get all the way up to 6.25% next week. Yeah, so obviously very wrong.
Someone hacked the CME group.
Yeah, I don't know whether they're just having a data issue, but I thought, because you mentioned PCE and the reaction, I know the Fed like it, so I was like, all right, cool, I'm going to have a look into what's happening. This situation like this is so reassuring. If you remember a couple of weeks ago, I did a big bite on how to work out what the futures market were pricing for interest rates. And I ran you through what they were doing for all the major currencies. This is why it's so important to know that. So when you see a tool and like this, and you go, hang on a minute, that doesn't sound right. You know how to check it. You don't just trade based, because some people will be waking up seeing this and placing trades, and it's alarming because obviously this is wrong. But I thought that would amuse you today, John. 100% chance of, what even is that? That's a 125 basis point hike.
That is crazy. That is. That's funny though. I like that. Maybe the US. That's why the US dollar's gone so rampant over the past few weeks.
Yeah.
They've gone that it's going through the roof. So let's get on it. Let's go buy US dollars. Mental.
Just for confirmation for everyone at home, this is the same contract, okay, at ZQX 2024. This is the November 2024 contract. 7th of November is when they're due for the next rate cut or meeting, which is just 2-3 days after the election as well. Chuck everything in the pit and light it. Let's see what happens, which is was a bit fun. But you can see it's priced at 95.35. The way these futures contracts work is you minus 100 from them, okay, or you minus this number from 100, and that gives you the forecasted interest rate price as an average over the whole of November. Keep in mind that this starts November 7th, so the 7 days of the current prices will be part of that multiplication, and then all the way through to the end of November is how this contract is priced. So you take this number, you minus it 100, that's where the market thinks it'll average the Fed funds rate throughout the whole month of October. Could go up, could go down, could go like this, but as an average, that's the prediction. That's the odds. It is not forecasted to go up 125 basis points next week. So lo and behold, the CME tool is broken. Let's talk about the VIX. John, give me a price.
What did I say yesterday?
20.6 or something.
20. Did I say 20.6? I thought I said 20.9.
Yeah, it ended up being 21.9. It
ended up being 21.9.
Yeah.
It's got to be higher then. 22.5.
22.54.
Oh! He's back. This week.
We are up in this upper area. We keep highlighting every day. You can see where we've tested. We've hit it. Can we break the 24 mark of the VIX? Moving into an election week with the Fed funds rate going to wars and all the macro other stuff, absolutely we can. Let's get behind the train. Let's see the VIX get up above 24. Come on, baby. No, but in all seriousness, I think it's very, very likely we get up above 24. Let me get you up to date with all the prices, what's happening, and then we're going to have a look at future prospecting, which I'm assuming we're going to be doing in the big bite when it comes to NFP. But with everything else going on as well, we'll get you a little bit up to date. So are you ready to run through the prices?
Let's do it.
Let's do it. Keep an eye on the right-hand side of my screen here. You'll see all these percentage changes. You'll also see the number, the pricing in which these assets are at, which are very important. Keep an eye on them. Aussie dollar is down 0.3%. Euro is down 0.2%. The pound's unchanged. The US dollar CAD is unchanged. US dollar Japanese yen up 0.4%. A little bit interested to see how US dollar CAD went yesterday, given the fact that GDP did come in pretty poor. Positive reaction, faded immediately, rallied this morning. Look at that. That is just a consistent rally in US dollar CAD recently, isn't it? Very, very interesting. Let's look at the same picture over on oil. Very, very positive. Very positive for oil. A CAD having the negative GDP or a slowdown in GDP has ended up being extremely positive. I sent a little message. Actually, it was in an email that I sent to you, John. The gap on oil, I want to fill it. The boss got angry at me and said, you're being an idiot just seeing a gap and wanting to fade it. I was like, the gap on oil, I really want to fade it. I really want to fade it. I didn't because the boss was getting angry at me, but lo and behold, I should have done it. The gap was too good to not. It was too, look at this. I really wanted to fill that. This was from the Israeli retaliation on Iran. That was the gap in there. Did it change anything for oil? Not really. Has anything escalated from there? Not really.
As soon as we broke that high there, that was it, wasn't it? You know, the market was going to be back into filling that gap. I think we actually touched on that Monday, didn't we? About filling that gap. You know, sometimes they don't close straight away, and this is kind of a very similar scenario like that.
Yeah,
a lot of people would have probably been buying on the day that it gapped, but if you wait for technical setups to come, like breaks of highs and things like that, then you can have a bit more confidence with going into things like that. So yeah, I mean, I didn't do it either. So
don't get me wrong, it was helped. It was helped, right? It was helped, but nevertheless, the gap was filled. Almost filled. I think we're just short of filling it, but I would class it as filled. It's not going to be really a money-making opportunity in there in oil. Let me get you up to date with commodities. Coffee is down 1.3%, gold up 0.3%, nat gas up 0.25%, silver up 0.5%, sugar up 0.18%, and oil up 1%, as you can see here as well. Bitcoin down 1.1%, Ethereum down 0.5%. Bonds and bond yields relatively unchanged this morning, John.
Like it.
That is there a game of table tennis or not? No, that was just straight. Okay.
No. I think the market's kind of performing how I would be expecting it to perform now. Oil, we talked about the potential closure of the gap. The only one I really don't like that he showed was dollar CAD. That move in dollar CAD has been extreme. To the point of where it's back. I think is it trading above 139 now? Or
it is 139.3. So we did all get all the way up to the 139.5s, and you can see this is actually where we topped out back in August as well, on the 6th of August. But we are definitely at the top of this range, which, as someone who's made majority of his money day trading and fading levels, nothing looks sexier than shorting that right now. I'm not going to lie. If I compile that with maybe a bit of a dollar, like Aussie dollar long, but then we're looking at. I mean, if we can get commodity currencies to show some strength over the next couple of months, this level could be really interesting.
Well, yeah, you got oil rebounding at the moment. If that continues, then that could be a little bit of support for CAD at the moment. Obviously, the Bank of Canada have been cutting rates aggressively, really trying to support what's going on over there. And this has largely fueled this CAD weakness. I mean, if you look at CAD across the board, though, it hasn't necessarily performed the worst, but against the dollar, it's been really butchered. Yeah. And we're up at these highs now, and I don't like it because when I look at retail positioning on this, they are heavy into this at the moment, and I don't like this at all. I feel like this could be a market that's going to turn around. So yeah, dollar CAD very interesting, especially as we're going into NFP today. Could we spike above those highs, maybe close back below? That could be our little potential trigger.
Before we get into that, also today, obviously, we just had Swiss franc CPI come in negative not too long ago. We also have, after the NFP, which will be the big mover, we do have the ISM manufacturing PMI forecasted to find a little bit of growth, but still sitting well and truly deep in those 47s, which is not great.
No, not at all. But I think the market will ignore that kind of data right now. I think it will kind of push past them at the minute, because we've got, obviously, NFP is big because it's the labour market data. Labour market is something that the Fed are going to really be focusing in on going into next week. But I guess we've still got that crux of the election. We can't ignore it, unfortunately. For us, we just can't ignore something.
I want to know in chat who you're picking. You have to pick a side. Oh no, let's make it better. If you're in chat, I want your interaction here. It's why we do it live, okay? I want you to say, who do you think is going to win? When we've got no political bias, we're just curious. And do you reckon it will have a positive or negative reaction on the US dollar?
Ooh.
I'll start it. I think Trump's going to win, and I think it's going to have a negative reaction on the US dollar.
Interesting.
Because I think money is going to go from cash to risk on assets very quickly.
Okay, I like
that's
that.
my play. What about you?
Well, I'm gonna play what happened to me in 2016. Then I'm gonna say Trump comes in, gold lower for the first 30 days.
Ooh, write it down. Someone get me a pen. Someone get me a pen. Gold lower for the first 30 days. Wow, I mean, we've got a lot to get through in November. Like, it's not just the election you've got to worry about.
No, absolutely not. But let's get into NFP. We're running a lot behind today. But I'd like to, I'd like to get your prediction on NFP, Jord. Do you want to know the forecast? Forecast is 106, and the previous was 254. So I want your predictions on this.
If I remember rightly, the 254 was out there. It just kind of popped out. Like we didn't see it coming. If I remember rightly, to last month, the 254 was a very outside figure. I'm going to go. We come in at 98. 98. And the 254 gets revised to 180.
Oof, that's a big climb. That is. What have you got? Why? Why are you going like that?
I can't tell you. I've got inside information. No. I honestly, I've seen how wrong and how like the revisions have been going, and I mean even seasonally, this is a flat kind of period, right? I'm gonna go. We're coming in at 98, which is 8,000 less than what we're forecasted. That's not too much, right? That's all right. But I do think we're going to have a 60,000 revision.
Okay. I'm going to go 180 jobs and a revised down to 210. We should probably write these down.
80 jobs. So you're going a good report.
I'm going a good report.
But then a revised down.
But a revised down on the previous. Still less than last time, but not as aggressive. I mean, look at this seasonal chart here. Usually now until the end of till sort of end of November into December, we can usually get that sort of bullish period for your NFP numbers. And this seasonal chart has been very accurate over the past 20 years or 23 years that we've got this data at the moment. So I'm kind of leaning more towards this as time goes on. You know, we were talking about it earlier in the year, and it's kind of tracked really nicely with this seasonal average. So that to me just kind of tells me that it's a normal sort of year in the US in a way. You know, they're not really like going away from it, even though it's not a normal year with the headlines that we've had and the aggressiveness of what's come out in the market. So
before we get into your analysis, and I know we're running a little bit over time, and I apologize, everyone, if you mind, but most people will probably actually quite enjoy this conversation. There are a few things. Barry, I like what you've said. I'm not going to bring it up because it has a political opinion. I don't care what you want. I want to know who you think will win, right? Based on the odds or whatnot, and how the assets react. And Marina's touched on something here. I really don't know what to say. I didn't follow fundamentals. I don't like the political side. Neither do we. We're not invested in he's English, I'm Australian. We've got nothing to do with the political landscape, but it is the strongest currency in the world, and it is the base currency for so many assets, the futures exchange. It makes a difference. I don't care what his policies are. I don't care what he's doing for the people or all stuff like that. What I do care about is who gets in office and where can I make money from it. And that's how we approach these macro bias. You have to drop your personal wants and beliefs in characters and all that stuff and come with a data-based approach.
Yeah, that's a really good note. You know, I see Barry. Sorry, I've missed Barry's message about the UK as well. I have no, although I'm in the UK, yes, I did vote, but I don't come to the charts with that political bias at all. You know, I don't look at this in a political way at all. I look how it's going to impact what's going on in markets and how can I benefit from that in that sense. Very much.
And it's a tough thing to learn to do, but you do over time. And there are times you do things that probably humanely you don't agree with. You know, the one that I always go back to is when Russia invaded Ukraine. One of my best trades was when that news was breaking out, and I went straight to the charts. It's about distancing yourself from what you believe in and doing your job as a trader. And that's what we like to do with this macro world. Drop the politics. We care about the data.
Yeah. I mean, I know we're going way over time, but I remember, and I've told you this story before. I was at a cryptocurrency conference and I was doing a chat there, and a guy was there, and he kind of got quite angry with me because I was talking about how to make money from the Bitcoin price movement, and he believed in the ethics of Bitcoin. I believed in it as an asset to trade and just to get something from it, and he didn't like my opinions on that. But that everyone's going to have different opinions on everything. But for me, it was just, that's a very similar context. You can have an opinion on something, but I'm not. It's hard. I'm not here for the ethics
to be a trader.
It's a very difficult thing. I don't consider myself a bad person, but sometimes when you make decisions on these things, you've got to put emotions to the side, and it can be very difficult to do.
I mean, we sit here and lightheartedly talk about unemployment rates, and we know that in the US, every time the unemployment drops by 1%, 100,000 people commit suicide. Like, these data stats have something, but your job is to be a trader and to make money. And it's important that you learn to separate. If it bugs you, right, either look at only trading ethical investments, if that will work as a profitable thing, or do what most traders do and go philanthropy on the side. Trade, do your job, but then outside of trading, charities, charity work, all that type of stuff.
Yeah, I must admit that's that's what I do a little bit. I go on the Just Giving page. Yeah, and I go through like some of the things, and I'll donate Just Giving pages and stuff.
Sorry, let's get to NFP tonight.
Let's get it to well, it's NFP, right? So obviously we've got this big announcement coming up. It's going to be interesting to see how the market's taken this. What I did want to touch upon is just where the hedge funds have been positioning themselves, because there has been some big changes to how they've been positioning themselves, and I find this fascinating because we're heading into a very important event. So I'm looking at this as like how are the hedge funds positioned going into a major event, because it could tell a lot about what's going on. Now, if you look at what the hedge funds have been doing, so we had this long signal back towards the end of September, late September going into the start of October. And the reason we had this is because they dropped, or the commercials dropped their short positions aggressively. Hedge funds dropped their longs very aggressively at the time, and they were peaking at extremes, and the market just kind of rallied higher. Now we've come off a little bit, but what I noticed was the commercial percentage change in shorts last week was 274%, which is a bit of an outlier. And if we go over to the extremes page here, US dollar, we can see commercial bias is heavily short, non-commercials heavily long at this moment. So when I look at if there was no fundamental play here and I was just looking at the commitment of trader reports, I'd be like, wow, it's quite serious. This is quite a potential for a short coming in on the US dollar. The only problem I've got with this, so when I look at the open interest, it's only at 19%, which is fairly low when you look at Bitcoin being at 97%, and that was at all-time highs recently. And you've got others that are like 90%, and the treasury notes and stuff. But this is 19%, so there's not a lot of interest in this market at the moment. But obviously the dollar index is just a basket of currencies weighted against the US dollar. But this is just very interesting to me because we pointed out the long that was coming from this situation back at the end of September, and now they are, potentially going into a bit of a short move here. I just find that really fascinating at the moment, and considering where price is trading at going into an event, we're kind of into these kind of highs in here as well, around those 105 levels. Could be an interesting little short play here for the US dollar, but do I want to back it myself? That's the question.
On the CAD chart, it might be worth a punt.
On a CAD chart, I like it. So that's what I mean. If I go and look at CAD, I think, well, what is, again, look at CAD weakness against the dollar. Do we say to ourselves, is that being mispriced? In my opinion, I feel like that is mispriced.
Yeah, it's Yes, I think the rally's gone too far. I also can understand people wanting to go cash into the election.
Yes, 100%.
So, like, I agree and I disagree. I agree. I don't think that's where the US dollar should be priced right now. But I also understand why people would be running scared to the US dollar right now.
Yeah, no, and me. Plus, the only way I see this really shifting, the reason why that market has been driven up so much was because the Fed were in a position where they might not cut as aggressively. I mean, CME Fed Watch tool means they're hiking 125 basis points. And then you've got the Bank of Canada situation where they're having to cut rates aggressively because of the poor situation going on over there. So we've had that reversal kind of in that price because of those reasons. Well, that's why I believe the market's moved higher. So if that narrative doesn't necessarily change, then prices could, break through those highs and continue higher, right? I just think that I feel like that move is a little bit overdone. When I look at retail sentiment really heavy in that market, and usually retail are wrong and they get it wrong a little bit. So I don't like that market. But I just thought this was interesting to show, considering we've got NFP coming up today. We've got the dollar in a really interesting position in terms of, I think this is a potential short-term short setup for the US dollar into those highs. So do I think it's a long-term short? Don't think so. I mean, we can kind of go back to the performance of 2016 and have a little look at what happened towards sort of November. This was the election back in 2016 with Trump, and dollar did find a little bit of support in that before having a bit of a tough time after it. so we'll see what happens.
I like it. Good stuff. But you take it to go today is a good one. You take it to go US dollar CAD. I want to see your technical charts, and to get it to us, we have a LinkedIn page. Market Wake Up now officially has a LinkedIn page. So guys, if you're on LinkedIn, you can even access directly to John and I, as we're posting on the page as well. Head over to LinkedIn, search Market Wake Up, and you'll find us out over there. We post a little bit of analysis of some of John's good videos as well, kind of sharing some of our thoughts from the big buy. And I want you guys to continue to do it too. Get part of the conversation, challenge yourself a little bit. Marina's done a fantastic job today. Made a call. Had a punt, made a call. Have a look at why you've made that call. Why do you think that is? And then have a look post-election to see how you got on. It's as simple as that. That's macro trading. Have a punt. That's the only way you get into it. The only way you learn to swim is by getting in the water, right? That's exactly how I say it. So we're on LinkedIn. Head over Market Wake Up on LinkedIn if you want to get in touch with us. You want to chat with us a little bit more. In the meantime, have a fantastic weekend. Next week, we're going to be here and there when it comes to streams, because we've got a very, very special event happening on the Trade Delicious main channel where we have the whole Trade Delicious team almost together to present some trading toolkits, and we're actually going to go representing Market Wake Up. We've made you a 14-page trading toolkit. That's going to be on Wednesday, 9 a.m. Not BST, it's GMT now, because you got it. 9 a.m. GMT on the Trade Delicious main channel. You'll see posts about it on the LinkedIn. Guys, have a fantastic weekend. Get away from the charts. Reset. John, we'll see you Tuesday.